Welcome to today's property investment analysis. We'll be exploring Saxby Road Industrial Estate in Melton Mowbray. As a chartered surveyor, these are the points that jump out at me. Let's dive into the positives. The property is located just east of central Melton Mowbray and lies just to the north of the B676 road, giving occupiers reasonably good transport accessibility. The property is set within a commercial area, with surrounding uses being fairly similar or non-conflicting. For example, there are no residential dwellings nearby, which can cause some issues for certain occupiers. The site itself seems to have a decent circulation road with good clear access back onto the main road. There appears to be a good mix of different size units on site. Some tenants have one unit, whilst others have larger units or space made up of several smaller units. There is also one plot of storage land which can be helpful, either being let to on-site tenants that need more space or a completely separate new tenant. The specification of the units on site are fairly typical of their age. This includes low eaves height and fairly basic warehouse accommodation with a single roller shutter door, although more modern estates would be more appealing to tenants. Looking at the leasing situation, the estate is fully let with 100% occupancy, which is always encouraging as it demonstrates there is currently a good level of demand for the units. Industrial estates naturally provide more basic accommodation, and therefore the type of occupier you get will be a smaller company. There are two tenants on site who have reasonably good total net worths. However, even so, they are modest-sized companies. Not stated in the brochure, but the estate is probably freehold, which is the best type of interest to acquire. This would need some investigation. Again, not stated in the brochure, but leases are all typically full repairing and ensuring leases complete with service charge provisions, and so landlord expenditure would be quite low at times of high occupancy. The overall passing rent on a rate per square foot basis is relatively low, so even with a high-level review we can see there is an opportunity to increase the passing rents at rent review and when leases come up for renewal. One thing to note here is there are two outstanding reviews. These can be settled at a more favourable rent. And backdated to the rent review date, these are immediate opportunities to increase your income. In terms of the condition of the estate, the brochure states that many of the units have been refurbished, and so that might provide a bit of comfort around any short-term requirements for capital investment. Many of the units do have an EPC rating, and at the moment they are all compliant with the current minimum energy efficiency standards. There are some units with good ratings of B, and there is even a unit with EPC A, where there are larger tenants occupying various units amalgamated together. If they were to ever leave it, is highly likely you could relet those units on an individual basis at a higher rate per square foot. Whilst the units probably have a fair amount of economic life left in them, one long-term opportunity would be to slightly reconfigure the site. You could demolish some of the office elements of the buildings where these are underutilised to create better circulation space for the estate. A great thing about multi-let investments is that when units become vacant, you have an opportunity to increase the rent whilst the vast majority of the estate remains let, mitigating reductions in your income. Finally, if you needed to release some capital, you could consider selling off individual units whilst retaining control over the estate and the service charge. Now let's consider the risks. Melton Mowbray is a secondary industrial location, and therefore travel times to other major cities and industrial hubs are less favourable than competing locations. You'll see from the pictures that there are electricity pylons nearby, and the power lines do cross the site. This will limit the height of any future redevelopment and will also deem the investment not suitable for certain types of purchasers. The nature of the small town of Melton Mowbray means the occupiers here are all likely to be modest-sized businesses, and access to good quality labour may be an issue for larger businesses. As alluded to earlier, the site configuration could be better as parts of the circulation space do seem quite tight, particularly for larger vehicles in certain areas of the property. This might not be a problem at the moment because perhaps one tenant is in occupation of various units, giving them the space to load or turn vehicles elsewhere. However, this can become more of an issue if letting to a brand new tenant. Although a lot of the units are refurbished, just given their age, there will no doubt be ongoing maintenance requirements and landlord investment needed to prolong their life. Therefore, although the tenants have repairing liability at the moment, there will be some residual risk to the landlord for future costs, particularly as some units have asbestos roofs. Also note from the pictures, the office accommodation for some of the units are of flat roof construction. This would need to be investigated to understand how much life is left in these areas, and they should be factored into long-term programs of maintenance. The occupancy level is good at the moment, and the site seems to have been well run from a letting perspective. However, investments like this do favour management-intensive investors, as there are more tenants to deal with, more buildings to deal with, and prospective owners should be prepared for a high level of management on estates like this. It can be seen from the brochure. There are a number of tenants with quite a low total net worth, and one tenant has a negative net worth. Therefore, the income on the estate is not without its risks, and in unfavourable economic conditions, tenants with weak balance sheets are susceptible to defaulting on their rent. We highlight here one of the tenants with poor covenant strength who occupies a sizable portion of the estate. However, it is worth noting if these units were returned, they could potentially be refurbished and relet at higher rents, albeit subject to a period of no rent and business rates liability whilst they're vacant. In terms of lease expiries, there are quite a few leases that expire in 2026, and there is the potential for an income pinpoint. In a worst-case scenario, there would be a period where the income could fall dramatically. This should be mitigated with proactive asset management and engaging with tenants early to renew their leases or to understand their exit plans. In terms of EPC risk, there are a number of units that don't have ratings. These would need to be assessed, particularly if you want any funding from a bank. One point not on the brochure is the flood risk for the property. Having checked this, the property lies in flood zone 3, and therefore as purchaser, you will need to inquire as to the availability of adequate insurance at reasonable rates. Typically, you will recharge this to the tenants. However, any unusually large premiums may impact on tenant demand. This does not seem to be the case, as the estate is fully let. In conclusion, this property is a fairly typical secondary industrial multi-let investment with potential to raise the current income by actioning rent reviews and proactively renewing tenant leases. Multi-let investments are not without their challenges. There are always risks around tenants leaving, not paying their rent, ensuring properties are maintained properly, and running the service charge. With an asking price of $11 million, this reflects a net initial yield of 6.36%. But this will be expected to rise as you grow the rents. All things considered, it would not surprise me if interest in the property was below asking price. Thank you for joining us in this property investment analysis. Get in touch with suggestions for future videos, and links to the investment are in the description. For more insights and detailed property evaluations, don't forget to subscribe and hit the bell icon for notifications. Until next time, happy investing.